There we go. Okay, so we're
Beautiful.
recording. So I'm gonna.
Oh, and I see that now. As I'm looking at the people on my screen, I can see it says Courtney Donaldson, host. So you're good there. Can you still see my screen by any chance?
Yeah,
Or?
I can
Oh,
still
that's
see your
weird.
screen.
That's good. All right, perfect. So then we're good to go. And
Okay.
it doesn't say there's anyone else asking to come in, so that's good. I'm gonna just go like that, I assume. That sounds good. All right, perfect. So now how do I move you guys? Like this? Oh, I see okay, they like faded to the top. There we go. All right. Hi. Okay. So welcome everyone. I apologize when I do this, I can't see anyone's screen. So if you want to interrupt or wait until I'm done and I'll ask if there are any questions at the end, please feel free to even type it in the chat and I'll read it after if that's all right. I think that would be the best way to streamline this. And like Courtney said, I agree with her 100%. I don't want to waste your time. So with that in mind, let's just get started. So welcome. This is my inventory and taxes chat with myself, Jessica Arcaro Ingram. A little bit about me to start. I started as a bookkeeper almost 17 years ago. I have been doing—
Hey, Google, close.
Oh, that's okay. I've been providing bookkeeping services for more than anyone, self-employed individuals like myself and small businesses for that 17 years. I started also in direct sales 5 years ago as a 31 consultant and have loved it. And I recently, a year ago, actually this is my 1-year anniversary in March, added on Norwex because honestly they're both to me very environmentally friendly and helped with obviously taking care of my family. And then I decided I needed some education, so I've gone on and received my first certificate in accounting for managerial decisions. And I did an advanced taxation focus as well for Canadian taxes because it was very important to me. Along the way, as well as being a 31 consultant, I've been a leader. And I enjoy the leadership because I actually got to help my downline with their business management solutions as well. So it was kind of like I was learning myself, implementing things, and also teaching it. And I saw a lot of need for direct sellers to be able to have a direction as to how to treat their businesses like a business when it came to not just tax prep, but year-round expenses and tracking, such as knowing where your money's going. And I'm sure a lot of people can agree with me. Often, a lot of people purchase and sign up for their direct sales business for 3-pronged reasons: the time, money, and product. Time being that it's flexible, works with your schedule. Money, obviously, that you want to make more money or save money by having a discount. And the product itself is always something, that you want to gain more product. You're ready to stock up. That's often the reason for me to sign up as well. I also find those are the 3 reasons why many of my downline, as well as crossline and sisters, have lost a lot of faith in their direct sales businesses as well. It's just simply that money, they have no idea where their money went. Time, they just don't have the time to figure it out. And also product, that often they're left with this huge stock of product that they're like, I didn't even want this anyway. I really wanted, like for 31, really wanted the large utility totes. Why do I have all this other stuff, and I just want to get rid of it. And even a lot of them will look at their stock and see and consider it, thinking they've lost money on it. And they're like, well, how do I get it back, kind of thing. And I find taxes, it also has to do with that. A lot of women, I find, women and men, I should say, they get to tax time, they've had a wonderful year, they've hit incentives, they've hit their great commission amounts, and it's great for them. They get to tax time and they will use the term, I've been hurt at tax time. And I hate knowing that. It means often that means that they've added on from their additional income, they've hit a higher tax bracket and have had to pay more taxes. But that's why I thought I would help with this. I find self-employment especially to be often very helpful on your taxes, but it really has to do with how you use your taxes and how you use your expenses. So that's where this came from. So first of all, I wanted to really quickly go through the basics. When you receive commission, hostess rewards, and when I say hostess rewards, basically anything that's in your name. Oh, sorry. Everything okay? Okay, I had heard something. You can interrupt, don't worry. So if you receive commission, any additional incentives, you may receive and expect to see those amounts on your T4A from Zyia. Now, that's one way, one part of when you go to do your reporting. Your T4A basically advises your T1, which is your reporting for your taxes, that you now have to go and attach it to a T2125 form, which is your self-employment form. So you must obviously report your additional income on your taxes. This is important because when you go to report your expenses, it needs to coincide with it. And you have to show where it comes from, kind of thing. So then with it also, whenever you sell inventory, say a lot of people do this, you order your stuff ahead of time, then you know you have it in stock, you sell it. You then have to be in charge of your income when you're selling your stock, because Zyia in this case does not pay attention and does not record your sales that are individual to you. And that's where a lot of people also find, if they're not doing a regular basis of tracking, they can get very lost in that. And that's something that I would recommend keeping up at least bi-weekly or monthly, depending on how much you spend, how much time you spend on your business. So with that in mind, if you're doing your own taxes, it will ask you first for your T4A and ask you to identify your T2125 form and how they match up together. And then the next line, or several lines in between, it'll ask you if you've received any other additional income that is not on your T4A. And that's where you would also put down anything that you received that were on hand stock sales. So that's the two different income amounts that you need to be able to track on your own, but also use your T4A for. T4A4, FOR. I apologize when I said it sounded funny. Okay, so then with that self-employment income on your taxes, the beauty of this is that often what happens is that when you start to report additional income from your T4A, as well as your additional income from your sales, that often it starts to mount on whatever income you may have otherwise. So often professionals, teachers, nurses are like our number one sellers in 31. They have wonderful employment already coming in, and then they do well on 31. You add it together, and unfortunately it could push them to a higher tax bracket and therefore require them to pay higher tax. And that's where I think people get very worried about having to pay more tax out. The beauty of having self-employment taxes, and Courtney will talk, and we'll ask about this later, about corporation taxes as well. When you have income in any way, you also have the opportunity to report expenses that go against your additional income. So basically you get to show what it costs you in order to earn that income, so that they can not cancel each other out sometimes, but it can drop down the amount of income that's there. So that when you are using self-employment taxes, if you do carry a loss in that year, that loss will also reduce your amount of personal income as well. So that's one of the beauties of self-employment, I find, is that there are some expenses that you might not know about, and they can actually work to your favor on your personal taxes, but you have to do the tracking. So when I also want to make sure you know is that you have to show evidence of your expenses. So when you're showing expenses and evidence, it could be as simple as receipt. Obviously, we get a lot of receipts either on hand. I always say if you're going to the dollar store to grab just some extra crafts and stuff, take a picture of your receipt, because you know those receipts tend to fly away on us sometimes. So, having a digital receipt on hand helps. Check your email, save and download your receipts to a specific place, always entitle them things like Zyia 2020 receipt, and then a little bit of the nature, so you know exactly what to search when you go to do your tracking and such. But showing evidence also can be, excuse me, there is a part for bank fees. So going on your banking account and being able to search your banking, and from that, literally searching like the date range, and then you can produce that if you ever need to show the evidence as well. So it's a lot of common sense, but it is about tracking as well. So why I have this in mind other than having the part about being a direct seller and being empowered even through tax time, I also need to make sure you know it's because you have to be your own advocate. A lot of people talk about when you go to healthcare, that you have to be your own advocate when you're talking to a doctor or any kind of healthcare professional. And that's because their time is valuable, and you need to get to the point, but you also have to speak up for yourself. It's the same with taxes. A lot of times what I find is that accountants don't realize what exactly to expect from you, and it's no one's fault. Often someone will, like a rep like ourselves, an active rep will go to their accountant, say, I needed my taxes done, individual taxes, and it's basically called a simple or standard return. And that basically the expectation of your accountant or your tax preparer is now saying to themselves, okay, so I'm going to grab all her T-slips, her RSPs, her medical expenses, tuition if she has any, and childcare expenses, bing, bang, boom, and this will take me 20 to 30 minutes in and out at the door. Probably by the time you get to your car, they already know what the result of your taxes are. That's why they price it the way they do. That's why, because they know the time expectation and the expectations of what they're going to receive from the taxpayer. What happens often is that it's almost like understanding that it's a self-employment position and a job, or not a job, I apologize, a self-employment business means that you 100% need to be aware of what you're handing to your accountant, and you need to know what you need to hand to your accountant, so that, or tax preparer, either one. I'm a tax preparer, I'm not an accountant. Like I have an accounting certificate, but I don't call myself an accountant. So I mean, like, you can have tax preparers that do this as well. But if you don't hand them that information, then you can't expect them to always answer you back and say, oh, did you forget X, Y, and Z? Because they were expecting to see you with just your T-slips, not with your business expenses. So that's why it's kind of like a twofold, two-edged, double-edged sword. The expectations of what kind of return you're getting, and the expectations of yourself. Saying, well, my tax preparer has never asked me for that information. It might be because they were expecting a standard simple return, and you were expecting someone to guide you. So it's just a lot about having to ask the right questions, knowing what to expect. So that's why I would always say you have to be your own advocate when it comes to your self-employment taxes and your corporate taxes. Same thing. So with that in mind, first step for your taxes for 2020, and this is a little bit of backtracking, I apologize, we are 3 months in, but that said, I think it's easier to do than 12 months. So I still think that it is worth talking about. I do want to make sure and stress that everything I'm telling you to do isn't technically necessary. If you choose to take your additional income that you had on your T4A and any other income that you received from your stock and just put it on your taxes and be like, I'm gonna, next year I'll track all of my expenses, then good on you. Honestly, I respect that decision 100%. This has to be that you feel it's worth it. I'm inherently cheap. I've learned to see the difference in that. But at the same time, for me, I say it's worth it to do the expenses. However, it's because I have the time to do it as well. I have the effort and the means and also the drive to do it. I completely understand. All of our lives are different and busy. And if this just sounds like too much information, please know that what's really important for you to know, no matter what, to report is your income, and then your expenses are additional. They're optional as to what you report. In order to knock down the income and to make sure that it's not taxing you at a higher rate and such, and the more expenses that you have, the better. Obviously, they have to be legitimate expenses, but we'll get there. So I just want to make sure before I started that you know that this is not mandatory. This is not something you have to do when it comes to the tracking. It is just things that will help you if you want to take that route. So first thing is your inventory tracking. Now, the beauty I think about Zyia is that I find you guys already need to know a lot about your inventory. Obviously, what you have on hand is what you're going to showcase when someone's walking in to meet you, to try on. You kind of already have a better wherewithal. When I was talking to my 31 friends, my Norwex friends, I have a lot of different consultants. A lot of them, I would have to say, start with tracking down where all your stuff is, put it together, write down on an inventory track. And I have a sheet that I can also provide that is, item, quantity, color, and size, and where is it? So you know where it is. And I would also recommend doing that, putting everything together in one spot so you're not searching. I don't think that Zyia reps would have that same issue, because for you guys, I would assume that you would already have it all in one place. Courtney has a beautiful display behind her, and it's because like, this is how you sell. You need to have your inventory very much on hand. So I just I didn't highlight that as much. If you wanted a little bit more extensive inventory tracking help, I I'd love to help you with that. But for right now, I'm talking about the general, like, here's what you do once you already have everything sorted. So with your inventory tracking, you need to make a list of everything you had on hand on up to December 31st, 2020. Since we are now in March, you need to make sure that anything that you've sold since December 31st, 2020, that you go back and put that on the list. So it does mean doing a little bit of backtracking on your end, but the reason you need to do it is because basically anything that you didn't sell up to December 31st, 2020, if you spent money on it in 2020, you can also show that it was not sold. Therefore, you didn't make any income on it. So it's called cost of goods sold. So once you've made the list of basically everything you had on hand up to December 31st, 2020, you then have to value it. So there are two different ways that most people would go about valuing their inventory. Number one is the retail value. The second one is what you paid for it, and that is your own personal preference. I always say it's how much you think you're going to sell it for, because from a business standpoint, if you ever had to pay back a loan or something, they're looking at the cash liquidation you have in your business. So really, it is you guys, and I'm wearing them right now, a pair of black zipper peak joggers. How much are they? How much do you know you would sell them for? And that's the amount that I would write down. If you do that, let you know for one item, how much would I sell them for? I would recommend doing all of them that way, so that it is the same determination for everything that you have in your stock. Otherwise, using the retail value is completely normal and fine because it's what it's posted at. And so I always say this about 31ers, and I'm pretty sure you guys are the same, that I would prefer to sell things at retail value, because I'm trying to train my customers to enjoy the prices because they are that value. If I'm constantly giving deals, then I kind of train my customers to expect deals, so it's a double-edged sword again. So I would recommend choosing one modality to the valuation of your inventory and then leaving it as that, so that you do every line that way. Basically, at the end of the day, what you need to do is determine your closing inventory. So that is everything you had on hand, the value of it up to December 31st, 2020. You also have to determine your opening inventory. That will also go on your taxes. Now, the opening inventory is pretty simple. If you started in 2020, it's $0 because you didn't have anything on January 1st, 2020 in your stock if you weren't consultant yet. Now, that said, if you were consultant on January 1st, 2020, you then need to go back. And I realize this again is a lot of backtracking. Whereas again, you may not know what your numbers were. It might be a little more difficult to go back to January 1st, 2020. So what I often recommend is doing a fair estimation of what common items you always keep on hand. I'm pretty sure almost all of you would have a pair of light and tights on you, if they're full length or the crop, I believe you call them. You would know what you have. So like, then if you know for sure, you always keep a black tight, neon cotton tight, and maybe two tanks on you at all times. That you always need to have that in stock. Then go with that number, because it is something that you can justify saying, I always like to keep this in stock. This is how I run my business. So that's when you're showing the evidence by saying this is the logical step. Just giving a random like $5,000, that's what I have in my inventory. You'd have to be able to justify knowing that number. That's where I come from. Okay. So if you have any other questions about that, let me know. But that's basically, I'm talking to you in the lines as you're filling out your T2125. So we've talked about your two different income lines, and then your evaluation of your inventory. That's under your cost of goods sold. And that literally means how much did it cost you to have goods on hand that you then sold. So that's where that number comes from. Next up, there are business expenses. So there are two types of business expenses. Again, I'm talking in the self-employment end of things. If you are incorporated, I would recommend ignoring me on the business personal property use, because that is something that is an advantage to being self-employed. And corporations don't have that as often as an option. But first, we'll talk about both types if you are self-employed as business expenses. So two types of expenses. The first is 100% deductible business expenses. We'll talk about that in a moment. And the second are a portion of your personal property that you used for conducting business activity. The important thing I should show you here right away is that when I say it's used for conducting business activity, it does not mean that you have to show income as a direct result of using that property. So I was talking about cameras. Using a camera, and that is your personal camera, or even your personal cell phone, to take pictures of you and your product or other people using the product. It's a personal camera. You use it for family events and such, and a portion of it you use for your business activity. It might not mean that you sell because you took a picture, but it is something that you use to advertise for your business that then helps you to sell. So it doesn't have to be directly related. It is just simply something that you have used a portion of it in some way to conduct your business. I hope that makes sense. So first, let's talk about 100% deductible business expenses. These are expenses that you purposely directly made for the 100% use of your business. Website fees are a big one. Any accounting fees like myself or bookkeeping fees. There are also legal fees that in case there's anything that is there. If you are incorporating, there are some incorporation fees that can be used as 100% deductible business expenses. You'll see also parking fees are one of them. Advertising, as in if you do print out even like postcards from Vistaprint with advertisements on them, there's some things there. Labels, if you're sending out anything postage wise on your own dime. My sister recently had to do that. Then you're paying for the postage. The postage is 100% deductible business expense. And that's usually what a lot of people do is use like a specific credit card, so that that credit card is literally for their business. And so it's easier for you to track, but also because you know I'm using my business credit card for my business expenses. It's almost like you're assigning the way you're using it in order to make sure that you're using it specifically for your business. And with that, you must track all your expenses in order to claim them, like I was saying before, and be able to show evidence. Again, if you receive like for example, Vistaprint, and you're on the website, make sure you print out to PDF. You can always go back and look at your order history later. You know, there are ways to track things if you need to go back and find that evidence, but I do recommend you hold on to that evidence for up to 7 years. Okay, so with that in mind, oh, I apologize, there's a TOT reference in there, that's 31. But when you're looking at your virtual office, so basically going through your order history and just searching from the date range of 01/01/2020 to 31/12/2020 to look at your websites and the website fees. I apologize, I don't you have to pay for your website. But I'm pretty sure you guys will tell me. I don't think my sisters have ever told me. That's funny. So then second in the kind of expense is the business use of home expenses. And like I said about the camera example, when I say use of home, it doesn't have to be something that's directly inside your home. Like the camera example, that is a home expense as in a personal expense, but it is something that you don't use all the time in your home. You could be out at the park using your personal camera and you're taking pictures. That's still technically called a home expense because it is personal property. So when we're talking about that, we're talking about personal property that you used a portion or a percentage of throughout the calendar year. And when we say calendar year, we're talking about if you signed up in 2020, it means from sign up date to the end of 2020. If you were active all of 2020, then I mean the full calendar year. Some examples of this are your home office, storage for your inventory. Again, your inventory does take up room. So you should be able to show that you used a portion of your home that you dedicated specifically for your business, and your home Wi-Fi. And I'm pretty sure almost all of us are using Wi-Fi or internet right now to connect. So I mean, that's literally you're conducting business using a service or a fee or a provider that you would otherwise dedicate as a home expense. So with that in mind, you then have to determine how much of your home, and this is actually home that we're talking about, you dedicated to your business expense, business activity, I apologize. To do that, you either go through by determining the square footage, and that means you have to report the entire available area in your home square footage. That means if there's livable room and area in your basement, it includes that. And then it's like one is available area. The second is business area. So then you can basically measure out the area that you use for your actual business activity. And business activity, when I'm talking about that, I mean if you use an office space or storage space or both, so that you're adding on those two together. They don't have to be together. They could be in two different separate rooms. The second modality is to use the number of rooms. Same thing. You need to know the total number of rooms that are available in your home. And then again, it's living space. So again, if you're looking in your basement and there's a rec room, that's counted as a room. If it's I was talking to someone, a utility room that's like laundry and really nothing else in there, and you really could not use it as livable space, it's not considered an available room. However, the bathrooms are. So with that in mind, you know your available rooms, and then you also need to report how many rooms in your house you used for your business activity. Now, either case, once you've determined the amount of space that is dedicated for your business activity, you go a second step further and say how much of that space that you've determined within your home you use, how much of it is used, like the percentage of time it's being used. So my example is my house. My house is very small. I have a one floor, like single floor, ground floor bungalow. I don't have a basement and I do not have an attic. I have an open floor concept for my living room, lobby, front door, dining room, and kitchen. So I literally have 5 rooms in my house. So I'm right now in my master bedroom, as I'm sure you guys can tell. And I can't honestly say that if I were to say I literally use one room in my house out of my 5, that would be 20% of my house is used for my business, which is not an honest percentage. I can, however, I use square footage for that reason, because I can then say, I can measure out my actual business area. What you're seeing is where I'm using like the desk area, my 31 storage, my Norwex storage. I'm also a photographer. All 3 I use in my front closet, because the front closet I don't use really for anything other than about 5 jackets. But I do know that those 5 jackets means I use my closet for some portion of it as personal. And then I do it 30, 30, and 30. So 30, 31 percentage, 30 for Norwex percentage, and then 30 for my photography percentage. And then that other 10% is personal. So having a very fair estimate of it is because I can show that I'm not using the full thing for business, but this is how I divvy it up. So I can also show that I do use it for business on a regular basis, but how much of it. So this is because, yes, definitely a lot of people use like dedicated rooms for specific things. Say you do have an office and a room in your house, however you share it, or the office is where the kids come in to use for homework. It's okay to say it's a multi-use room. However, at some point in every day, you could say, a lot of people dedicate their own office hours. So say Monday to Friday, you always work 2 hours every evening in that office, then it'd be easy to do 2 divided by 12 and 24 for those 2 days. And they those that for each day of that you do that. So actually the example I always use, because I remember the number, is 1 hour every day you use in your office. That's 4%. So 4% of all of your home bills would be very easy to determine a deductible amount from there. So be honest with yourself. It's not something that I've always read about how the CRA looks more as a red flag if you are like painting over it 100%, or it just like those round numbers. When you are more honest about it, even if it's an estimate where you go through and say, okay, so for today I noticed I did this much, or each week I work approximately these many hours divided by how many hours there are in a week, it's easier to show that evidence by just being common sense with it. So be or be fair with it, be honest with your estimate. I always say some deduction is better than no deduction. So it is worth doing, but at the same time, like I said before, it is optional to report your home expenses. So with that in mind, also we have to go through your personal property, as in your motor vehicle. Now, the thing with the motor vehicle is it's just like your home in that you have to show how much of your vehicle you used in order to conduct business activity. It does not have to be directly related to profit. It does have to do with mileage tracking from total for the year versus how much you used your business. So with that in mind, and there are, I'm not sure if you guys are like me, 31, often we've had some shipping delays in the past that were epic, like 2.5, 3 months epic. And, often we would, 31 sisters in the area would hand each other their inventory to get through that time and be like, I'll replace it when I get here. So it could be as simple as that you're picking up products from each other, you're dropping things off to try to a customer, you're delivering your customer's order, or you're dropping off even if you do have catalogs, dropping off a catalog or a little binder for your hostesses to go through. So it could be a lot of different reasons that you got in your car to drive somewhere. It doesn't have to be just specifically order driven. I was talking to someone about how she always used to pre-pandemic meet potential recruits, meet her team for coffee and such. Like, there are many reasons why you might get in your car to work your business, and that's totally justifiable. You just need to show mileage for that. So you're tracking both your total kilometers traveled in 2020 plus your total kilometers traveled for business purposes. That's how you then can take your totals for your gas, your insurance, there's 4 of them, your license and registration, and any repairs and maintenance on the car. You take those totals and literally taking the percentage of how much you drove on it, the use of the car, taking, and the math is there for you if you use a tax program, or if you use a tax preparer, will do the work for you. So that percentage of those totals is then being worked towards your business as an expense. One thing I did mention before is that 100% deductible to keep track of is business parking fees. Again, you may have stayed home a lot in 2020, but in normal times, if you went anywhere, 31 has a conference that you have to travel to, especially if you're in Canada. So parking fees are all along the way. And so keep your parking fees keep track of them, because 100% of them are deductible. Again, if you get those like printouts when you park somewhere, take a photo of it, email yourself later, parking fees from this day, all to do with Zyia, so that way you have it titled, saved on your email, somewhere you can find it, and you don't have to worry about if they fly away, which I'm pretty sure happens to more than just me. So with that in mind, I wanted to, again, go through really quickly and make sure you know that tracking down your expenses does take time when you're talking about 2020. I am hoping that, if anything, everything I've taught you today or talked about today, you can take forward and track back to the beginning of this year and feel more confident, so that 2021 is a whole lot easier than 2020 taxes. That said, you can always ask for help. If you saw it in my first or second expense slide, having a bookkeeper on hand or having accounting fees of any sort are 100% deductible. That's both corporations as well as self-employment. So it's meant to be, I believe, that the CRA is saying, don't waste your time and our time, get it done right the first time. And there's nothing wrong with that, because I mean, honestly, a good business run properly takes stress off of everyone, you know what I mean? So that said, I wanted to make sure you knew that. I also sell, and you'll see, I sell business systems with tracking sheets that will help you with both your inventory tracking, your customer ordering tracking, your income and your expenses tracking, and also your annual amounts that you need to have on hand for your taxes that you can prepare every year for. I apologize, I need to go back. You guys are gonna laugh at me. Here, inventory valuation. One other thing that's important is, once you figure out once you figure out your December 31st, 2020 closing inventory, you will have also figured out your January 1st, 2021 opening inventory amount. That's the best part about this, is that they are the same number. I know, so you're already, by doing the work for 2020, you're starting your work for 2021. I just wanted to make sure you guys knew that. I apologize, it popped in my head as we were talking. So yes, asking for help helps. And there's nothing wrong with asking for help. I often say that, like, you want the car, it doesn't mean you have to be able to fix it. And I don't know how to fix a car. I literally right over my head. Don't ask me. I've actually gotten to the point where I put my phone on speakerphone and said, like, listen to the mechanic. What does he say? Like, because I'm an intelligent person and I still don't understand it. So understanding that tracking down your expenses takes time. I think it's worth it. It doesn't mean you need to think it's worth it also. I understand completely. But that said, if you need help, because it is a business expense and it's a logical expense to have. Oh, so with that in mind, I always offer a self-employment tax return offer for my wonderful attendees. I leave it open. So it's on a limited time offer until Friday, March 19th. So anyone who can't see it, I just press play again just in case. Anyone who can't see it today, I believe this will be available. And if anyone wants to discuss things with me, please feel free to. And then last but not least, I do offer, like I said, some templates that come to by my company, Books by Jessica. And I have with it an in and out sheet, which is your income and expenses sheet, customer management sheet. And what I love about it is the customer wish list, because things do go out of stock, metallics. And I happen to know the saga of the metallics, but it's good to have somewhere for you to track what your customers like, your follow-up times on it, and when they receive their information, everything like that. It's just great to have somewhere to manage that for yourself as well as for them. An inventory sheet. So this is something you can update it on throughout the year, keep it on hand, easy for you to do. I don't know if you're like me, but with 31, especially in good times and then the new or normal times, someone would literally walk about on the street to me and be like, do you have one of those wallets in hand, all about the Benjamins? And I would just be like, hold on one second, let me check my inventory. And I think it's super, it's stress relieving to have it on hand, mobile, that you can check at any time and update as you go along, so that this isn't as simple as next year, what did you sell in March? Like, knowing that number might take some time to get back to. And then your annual amount sheet, something for you to have on hand to prevent and provide to your tax preparer. So that also helps you to not forget what to have on your sheet. So that's that advocacy for your tax preparer. So I hope I didn't go too quickly, but I think that's the end of my presentation. I'm going to go like this. And then do I stop share? I think I stopped share. Let me do that. Okay, good. Oh, hi, everyone. There's a grid of people. Okay, wonderful. So I'm going to go and quickly go through to the chat and see what questions are there. Is that okay with you guys?
That's great. That was
Good, good.
that was so helpful. Thank you so much. But yeah, I see
Thank
some
you.
questions in the chat.
Yeah, perfect. So let me see. Can you record? Okay, we did that one. Can you claim your starter kit? Yes, definitely. Your starter kit is your first expense. Often, especially because you get order forms and like verbiage and stuff, like pages and stuff, I would recommend using that as your first business expense, and categorizing it as your office expenses. Yes, oh, thanks. Thanks, Courtney. Courtney got it. So then same question. TurboTax has 3 different T2125 options. I apologize, Rick. I don't know what those are. I'm not using TurboTax myself. It would be commission activities that you would be using for T4A. I would recommend, Rick, that you start with entering in your T4A, I believe, and then it will pop up and like automatically generate a T420 and T2125 to correspond with it. And that's how you go through. It does ask business name. On that business name is your Zyia, and it's not you, but then you are the contact information for it. I believe you then have to collect, make sure that you get your industry number. You will have to search the industry number. And if you have nothing else to say, just write and like literally type in other direct selling and merchandising, and it comes up easy, simple. Next question, which one is relevant? Oh, that was the question. So yes, commission activities is where you go. Next. Can we also claim clothes that we buy personal for others to see? So if you are using it as in to see as an advertising, then it is an advertising expense. When you sell it, again, if you're claiming the expense, you have to claim the income as well. So they match, like they go hand in hand. They might be different pricing, but if you're going to claim expenses, claim the income as well. Would you claim whatever apparel we got for free while closing party? So you don't claim the freeness. If you did have the party in your name, I believe you will. Most direct sales companies will have that as part of your T4A, so that it's like an incentive or any kind of rewards that you got. It's not technically commission, but there's, I think it's box 154 will come up as basically free stuff. So if there are any other incentives, trips to be had or anything like that, your amount will be there. Hostess rewards are part of that. And oftentimes people will tell you then to never be your own hostess. That's really up to you. But at the same time, if you were your own hostess, just beware that that number will be on your T4A, because Zyia knows you're you. That's why if you're anyone else, any other hostess, Zyia is not tracking your hostess rewards for other people. But that said, once you've claimed if you've gotten the apparel for free and you're using it, then there's really an expense there. But when you do sell it, you do have to still claim the income from it. So, I mean, I always say it doesn't always cost us to have the free stuff, but say you topped up a party, you purchased, again, another pair of joggers for another $110. And you did that out of your own pocket so that you topped up your party. You knew that you'd get more credit, or you got another free half off item by doing so. Then you get your, let's just say you're under the $1,000 mark, you hit the 20% commission. So you get $20 back. Let's say it's a $100 item. You get paid back at $20. So that commission's being recorded by Zyia. The $80 expense portion, it's an expense, because you're like, that could be goods, so that's part of your cost of goods sold. Or if you're just using it to show that product, then that's your advertising. But then when you go to sell it, if you sell it for $100, then your $80 expense is already there. Your $100 income has to be, like, they have to match. And so expenses here, income here, they have to match to each other. So even though you might get, so let's just say you've paid that $100 item, you get the $80 right there, the $20 in your income for your commission, and you put the $80 there. And then you get, just because we're hypothetically, you get another free pair of joggers with that, because that's how you topped yourself up to get that free pair of joggers with the hostess credits, because you had a mighty fine party. So by doing that, you obviously can put those two items in your inventory. If you sell both of them, even though that one pair was free, you do have to show the income for it, because it was something that cost you something to get it, and then you did get income from it too. So both sides have to be reported. By just saying that it cost you hundreds of dollars to buy all this stuff and all you have is your commission, it's not being honest. And so you have to be like, both sides have to work together. But that said, if all you do is claim just your income from your commission as well as stocks in income, the government's fine with that too. It just means that you will be taxed on that full income. So that's why it's great to show the expenses, but they do have to coincide with income. That helps. I think we already did this. What about EMTs? You mean e-transfers? Is that what she means? Receiving EMTs or getting
Can
EMTs?
I see?
Sure. It's Angela
Yes.
LaHaye to
Yep.
everyone.
Yep. So some of us offer incentives and let's say free shipping.
Mhm.
So they would go ahead and place their order and then we would EMT them the shipping. How
Yeah,
can we claim and track those? Like, I keep all the emails, but I'm not sure if printing all, and what I've also started doing is in the notes section,
Yeah.
when I send the EMT, I'll say Zyia free shipping or whatnot to make a little note on the transaction.
That is gorgeous, Angela. You've done a lot of the hard work for yourself, because you're going to need to go and track it now. So putting it into a spreadsheet, definitely that's part of your expenses. By offering things like free shipping or 10% off your order, that is all advertising, because you're incentivizing the customer to purchase. So that is an advertising fee. The EMT is as in, like, if you have a transfer credit, like an e-transfer, charge. So every time I send an e-transfer, it costs me $1.25. That's a bank fee. So you would literally, if you saw my sheets, you would see date, expense. So you're describing the expense, and the nature. So the nature is the category it goes in. So for the actual shipping amount that you're reimbursing to your customer, you would put advertising, and then the bank charge would be separate, same date, sent back, or reimbursed shipping to X, Y, and Z. Like, I would even say the person's name to remind you in case you ever have to show the evidence of it. And then I would say literally under nature, it would be bank fees, and that would be a part of your 100% deductible fees or expenses on your account. Does that make sense?
Yeah, that does. It answers my questions. I just didn't know if they would like accept that type, because
Yeah, they're
sometimes
legit. Yeah,
you can buy like gift cards too and do it that way and then just print off the gift cards. But as long as, I guess, because we get an email confirmation as well that it was deposited as well. So we could always just print all of those out, right?
Yes, definitely. When you go to your tax preparer, though, obviously don't hand them all the sheets. Total them up. That's all I mean. Make sure you have your totals. Good, good. Okay, wonderful. Thank you, Angela. Lovely question. Thank you for doing that. This is wonderful. Thank you. All right, so then I can claim enough, and even though I'm not registered as a small business, no. So you, as an independent consultant, you start as a self-employed individual. You can incorporate if you would like to a small business. There are upsides to both. I've done a little bit of research today because I walked into always thinking incorporation was because of liability. In terms of, say you're a restaurant and you have cafe owners walking in or patrons coming in the door choking on food, you never want to be liable at that point. You don't want to be an individual being liable for insurance purposes and stuff. So that's where I've always said our incorporation makes sense. Courtney today enlightened me. Thank you, Courtney. And I agree with it. If you are making, if you are substantially already employed and then you are having additional income that is becoming that you're boosting yourself into higher tax brackets, then definitely incorporating would be something that would reduce your taxes and on a personal level. That said, the expenses are different in incorporating. You do also have to pay for incorporating, which that means more fees up front. It really would be a personal decision on your own. Another question I know will probably come up if it's not already here is about charging HST. And I'm sure you're aware, but I will make sure you know, if you do charge HST and do not have an HST number, you cannot. Basically, if you charged a customer for HST, I had to stop my sister one day. She was selling a pair of joggers and she was like, plus HST. And I said, do you have an HST number? And she was like, no, of course not. This is my business. And I'm going to, you can't charge HST if you don't have an HST number. So what's good news is that say you paid for it, you obviously paid HST on it, you can sell it for what you paid for it because that's basically saying I'm just recouping my expense. However, if you add HST to it and say to your customer, it's 99 plus HST and it's on my personal stock, your customer can require you at any time to produce your HST number and you will not have one unless you register for an HST number. When you register for an HST number, though, you then have to start remitting your HST. So it's double-edged sword. Are you going to pay out more HST by doing that, by having to remit? Or would it be better for you to just say, okay, I spend this much on it, this is how much it's worth, and that's it. And until, unless you make over $30,000 within a period, and that period is a calendar year again. So in 2020, if you made more than $30,000, not on your commission, but on your individual income sales that you did on your stock, then you would have to start charging HST. So that's like, again, another part of your decision making for your business. What's great about it is that it's optional until $30,000. So I often say, unless you, I would be confident to say I want you all to make more than $30,000. Let's go, girls. But at the same time, I don't want you to think that it's something that's mandatory. If you are saying, okay, I'm ballparking that I won't hit over $20,000 in income sales that are not part of my commission, then you never have to talk about the HST end of it. Just don't be charging additional HST on your stock because it's, again, double-edged sword. If you're telling people you're charging them, you have to remit it. So that's like, again, income versus reporting. I hope that helps. All right. So for example, if Courtney's clothes behind her are not for sale, but are showing as in parties, can she claim them? Yes, she can claim them as advertising. Now, Courtney can also wear her clothes. Definitely, you are your best advocate as well as your best mannequin. So Courtney, use it in use. That said, the personal fine line is that if you're purchasing it and then at one point or another giving it as a gift, then it's no longer considered advertising. Like you can't just be like, I bought it all for everyone. You have to be using it for business purposes. So make sure you show that. And that said, I should mention that if your inventory up to December 31st had anything that's available for sale, but then on January 5th, you remembered somebody's birthday, you can change the nature of that inventory after the fact. It's literally whatever was available up to December 31st. Those numbers can change. The nature of the thing that you bought can change. 31 is my worst enemy in some ways because I literally literally will buy a large utility tote and be like, this is mine. And I put it down and I'm like, it's mine. And I don't take it out of the package. And 5 minutes later, I'll sell it. It's like, I keep calling it accidental selling, but it's just literally, it happens and the nature of it can change. So it's okay to change the nature. Just that on December 31st, 2020, what did you have on hand that was available for sale? So that if it is something that just came and it just didn't fit you and you were like, okay, I can sell this, throw it in my for sale pile, that's cool. That's really understandable. It's legitimate and it's all right for you to decide to change its nature at any time. I hope that helps. So I think that's the question you were asking, Mary. Tell me if it wasn't. Okay. And then, so when we offer percentages off, we can't claim them. They are, this is our responsibility. I believe, Jules, I'm assuming is how you say your name, Jules. Yes, when you offer the percentage off, that becomes an expense as in that you're, again, just like Angela was saying, you're reimbursing somebody if they're purchasing it at full price, then yes, definitely that is an advertising expense. I hope that makes sense. This is Anita. Hi, Anita. I just started in Zyia mid 2020. Congratulations. I'll have more expenses in 2021 or 2020 to offset the small income tax on my commission. Do these unused credits transfer? No, they do not. So Anita, as long as you are not incorporated, you cannot carry over your losses. So that's the one thing that's important when you incorporate. And that's one of the nicest things about being incorporated is that you can have carryover losses. So if you do anticipate having a loss in your business, you can, I would recommend incorporating. I don't think any one of us goes into a business going like, I'm going to be losing money for the next couple of years. But at the same time, no, you cannot carry over losses from one year to the next when you are self-employed. But that said, those losses in your business can counter your own or your spouse's income. So, I mean, there is well, that's what I like about self-employment. My husband last year before the world blew up around us and he wasn't full-time employed, I literally said to him, like, this year you're going to start a direct sales company. I don't care which one. You just need to be self-employed. And so then the world blew up and he started Epicure after he lost his job. So I mean, it still worked out for us. But self-employment allows you to have more expenses that are personal, like your home expenses. You can't use home expenses when you're incorporated. So I mean, it's great, especially incorporated for, we were just talking, my sister owns a supplement store and my family owns a gym. So the gym and the store, having them incorporated makes sense because even if someone, God forbid, falls when they are trying on your clothing, and you don't want to have that liability of having to have that personal insurance that could be what sinks your business, even though Zyia seems to be like non-incidental. That's what I would think about. So if you do have a second site that you have for like rent on your property, on your business, property taxes, then incorporating also makes sense for that reason as well. Okay, let's see. Oh, yes. And so if I didn't say that again, Anita, just to make sure you heard me, carryovers are not able, you're not able to carry over your loss from one year to the next. However, the carryover of the loss of your business when you're self-employed can work towards your personal income, which is nice. So I hope that helps. Thank you, Ashley. I appreciate that you think I'm helpful. All right. So Anita, so my Zyia expenses can reduce my income tax for my day job. Yes. Anita, yes, exactly. So it's like I said, self-employment, I always be like, knock it down, people. So it is nice to have that. Again, make sure that they're legitimate expenses. And that's all that matters, is that you can show evidence. Okay. Any other questions for me?
So what you were saying was basically if you do have like a party link set up and it's under your name, it goes against you, correct? As your income.
Yes. Hostess for
so
once.
I should basically change, because I have people that live local to me, and so I just keep it under my name, and I'm gathering now I need to change it to their name instead, because I wasn't aware that it did that.
Yeah, well, Zyia can only track you, right? So I mean, and that's kind of like, it's double-edged. You're like, thanks, Zyia, but at the same time, yes.
But it doesn't apply to like just single orders that are under my name then.
Yeah,
so just would be the party.
Yeah, and you know your order number and you're paying attention to that. Often somebody will look and just put in your husband's name. Like, seriously, anyone but you is what I say. Yeah.
Yeah, I wasn't aware of that. So
my mom's been my hostess a billion times. Like, you know, she don't mind. I had a friend of mine say to me, like, I must have left her email address on it. She's like, did you know you put a $400 order in my name one day? I was like, you're welcome. And it just, you know, you walk away and you're like, love ya. But yes, definitely Zyia is looking at how the rewards are coming up. So that's the only thing, is that it will be on your taxes. Offset it for this year, learn for next year.
Okay, this is my first year actually making.
Congratulations. When did you start?
Oh, I signed up like last December, but I never did anything till this March.
That's awesome.
March. So it's been like a year that I've actually done something with it.
That's awesome. Well, congratulations.
Thanks.
That means you technically can use your expenses for the entire year of 2020. So go for it. Even if you only bought for yourself, there might be some things, especially because, like I said, I think direct sales does that. You're using someone else's product. Obviously, you don't have to create the product yourself, but it can really provide the self empowerment of saying, I did this. Like, no matter how you did it, girl. Look at you. You survived for the last year and a half, and now you get to rock out even more, because you'll be so much more stronger because of what you've learned so far. So I mean, honestly, run with it. But at the same time, if it meant that you got closed because you wanted to advertise, you are your best billboard, as they always say. Be your own billboard. Wear the stuff, be happy in it, be comfortable, and it's just easy to sell that way. Which is and obviously I'm a convert. Love to sell. I love to shop too. Thank you, though. I appreciate you coming on here.
Thanks
Can
so
you
much.
sorry, excuse me, can you add to that? I guess I'm confused about when you say having party orders under your name, because you would get commission on them anyway.
No, party hostess, like being a hostess is what I mean. So when you have a hostess, like if you are your own hostess, Zyia sees that and goes, okay, so the hostess is the consultant, right? So if you received free items or half off items or anything that is like incentive wise, Zyia tracks it, because it is Zyia paying out something free to you. So they will, on your T4A, it's a box 154, and it's for any incentives or free product that you receive from Zyia. So if you are the hostess, Zyia sees that, obviously, and then they will track your, and it's basically considered a benefit of being the consultant.
Oh,
yeah.
So let's say I do vendor events. So let's say I do vendor events and orders trickle in under this one host party order, but it's obviously under my name because I'm getting all of the rewards.
Yeah.
So I should be putting these under someone else.
Yes. That even someone in your own household. My daughter, she's 8. She's hosted a bunch of 31 parties for me. And then, honestly, and no one notices other than the fact that they're like, "Oh, it's going to your house." I'm like, "Yeah," it's shocking. But yes, make sure it is a small penchant that a lot of direct sellers need to tell each other, and often they don't explain why. But it's because Zyia obviously can tell it's you, and so they will make sure it's on your T4A that you've received an incentive, even the free credits.
Great. Okay. Thank you.
No problem. Anyone else?
This is perfect.
It's okay if no one has any questions. I just thought I'd make sure.
We had one last question. It says challenges in our VIP group, and we give gift cards. Can we claim it? And I think you went over that earlier, right? They can.
Yes, anything that incentivizes people to purchase is an advertisement. And that literally is like, I don't know if you guys use it for your events, doing mystery hostess, so that you're literally like, anyone who orders this month, I'll put you in a draw to, and obviously the hostess benefits increase as you go. You're incentivizing them. So whoever gets those hostess benefits, if you're offering free shipping for this week only, if you order, that free shipping is definitely advertising, because you were literally saying like, if you do, then I will do. So that's advertising. And so yes, definitely any kind of gift cards to winners, as well as team building. I want to make sure you guys know that your downline, if you get even gift cards for your downline, or often will buy each other products because I mean, hey, again, there's incentives to purchase your own product as well. Make sure you are paying attention to that because that is an expense. It is advertising. It also can be considered an office expense because it is purchasing to grow your business. So use it whichever nature you want to, but always be consistent. So if you decide that they're all advertising, then keep them advertising. It shows how you do it as well as how you came to that conclusion of it too. And yes, 31 also has personalization. I don't know if you guys do it all, but again, if you're personalizing for your team members, same thing. Again, having team relationships in any way, shape, or form, it may cost you, but it is definitely something that you are, unfortunately, at the end of the day, you are building your team, you're increasing your income. So it is an expense.
Perfect. This has been so helpful. I was going to ask, I know we talked about this question that I was going to ask you. So as we are continue to grow with Zyia, and many people, are continuing to grow along with the company, when would be a good time for them to consider to incorporate?
Well, yes. So as I was saying, I did a lot of research because I wanted to make sure I came to it from both ends. It really has to do with obviously a personal situation. And like I said, if you are having the outside of your home venue for your Zyia, I would incorporate faster than if I needed to and if I was inside my home because of the differences of expenses that you have. Definitely if it's your income. If you are looking at, so I'm not sure if you guys are aware, everyone is taxed at 15%, which is the start. You are allowed up to $13,849 this year in 2020 taxes. You're allowed your basic personal amount. So anyone who collected CERB for the $14,000 maximum, you would be still taxed on the difference between $14,000 minus $13,849. So, I mean, if you made no money at all, though, you could still play within that $13,000. So that said, after the $13,000 of income, you are taxed at 15%. After that, going up to $45,000, I believe it's like 45. I always get the last three numbers wrong, but it's around $45,000. Your tax rate goes from 15% to 20% and onward from there, 45 to 90,000 and onward from there. So if you are anticipating that you already are comfortable in the amount range that you're usually in, under the $45,000 range is ideal. But I mean, we all have the cost of living, children, mouths to feed. We understand that completely as well. There are obviously tax deductions at hand as well. There are people that save better, use their RSPs more, and do more charitable donations. I have a lot of medical expenses, not for myself, but my husband. He runs a good $9,000 in prescriptions every year. So I mean, I love him, but my goodness. We don't have a second vehicle, everyone, so it's okay. But I just at the end of the day, everyone's personal situation is different. If this is your only income, however, you may not want to incorporate because having some income is better than no income when you have children. Having your child care benefit. It will increase with income depending on how much you make versus if you don't make any at all. So, I mean, there are a lot of different benefits to incorporating. Like I said, make sure you ask a professional because when you do go to do the incorporation, there are taxes and fees up front that you need to be aware of. You will have to do reporting on at least an annual basis. And like I said, if you do start charging HST along the way, you will have more reporting to do. So there is a little bit more on the business end of things too. And Courtney, I love and appreciate the fact that you are coming from it, that Courtney, guys, she's incorporated. So you guys have an amazing resource on your hands that she can help you walk through, refer you to the right people, which is amazing too, because when you don't know, you don't know. But I do always recommend when starting any kind of business that you consult with a accounting professional of some sort. It's almost the same as asking your spouse because I don't tell them. But I mean, at the same time, you should be checking with, your gut and an accounting professional. So check your bank account. So it's just as simple as knowing you're getting all your ducks in a row, but there will be additional responsibilities when you do incorporate. But at the same time, if you are finding, like I said, the term "I got hurt at tax time" comes up a lot because of unfortunately additional income. When it is additional, it piles on and it can move you to a higher tax rate. So obviously, like when you're looking at 2020's taxes, incorporating now will not affect them. You will still have personal income. I would say beginning of the year, or once you're through your tax season, then sit down and say, am I going to do it again? You know, and then go from there and have a real conversation. Talk to Courtney, only because Courtney's like, she's available. But at the same time, there are, like I said, liability wise, it is great to have the incorporation, because basically in worst case scenario, and I never want you to ever think about this, but say you have to default on all your loans, you are not personally responsible for them. So you wouldn't be hitting bankruptcy on yourself if you had to hit bankruptcy on your business. But at the same time, we really hope you never had to get there. And so I'm just like, I tell you about liability for that reason. Like I said about insurance, if you did have, oh, and you were going to ask me about people hiring others, same thing. If you had workers that could be in danger, then definitely being incorporated would be good too. Again, hiring someone to model your clothing might not be as much of a dangerous thing to do. Don't ask them to scale buildings. But at the same time, knowing that you do have employees underneath you, there's WSIB, you'll have to be, if you're paying them like proper payroll, which you can do when you're self-employed, again, you would then have to remit those payroll deductions and such, but also there's insurance involved, so that becomes a liability. And again, I would then consider incorporating for that reason as well. All right, so sorry, I had another question. I'm so sorry. I'll just go over here and check. Angela asked a question. So what percentage should you put away for taxes? Courtney had an amazing thing. She was telling everyone 25%. So that's almost your commission right on. Angela, that's literally, again, that's based on your own personal income. So if you are already employed outside of your home, because I'm self-employed 100%. So I don't ever like to say like you're just employed or anything, but if you have any other employment income, self-employment or employed income, then yes, you should be putting 20% is good. That said, if you are putting away your RSPs every year, then that amount might be a little bit less. Even if you can check, you can put away 3% of last year's income. So 2019's is what 2020 would be based on. 3% of your 2020 will be what you can put away for 2021, plus anything that you haven't put away from years past. So that amount might be higher. And I was very recently blessed with a team of Gel Moment women who all of them skyrocketed in 2020 because of lockdown. You did your own nails, and I fell in love with them, as you can see. What is shopper in me? But at the same time, the Gel Moment ladies were telling me about how a lot of them found that they were empowered to finally be able to put away money because of their commissions. So your RSPs are really great to do as well, because that is money that obviously you can withdraw when you are no longer making as much money later on in life. You're setting yourself up for it. You're incurring interest on it. So you're not just paying the government and crying in a little ball. Instead, you're putting it towards something that you're paying it forward for yourself. So there is always that option as well. That said, Angela, if you are a full-time student, there are some better deductions out there for yourself as well. And again, if you have children, childcare and childcare expenses, there are a numerous amount of things that you could also be spending that it would also work towards your taxes. And that said, in Ontario, there's the Ontario Trillium benefit. So having either paid rent or property taxes in 2020, again, those are things that will go towards deductions on your taxes, as well as the climate action incentive. I always switch the words. I'm like, climate incentive action. It's not, that's backwards. Climate action incentive. There's also other taxes to be, deductions to be held, and the Canadian workers benefit. By having any kind of income in Canada, you get a benefit from doing that too. So, I mean, having income, I apologize, Angela, it's not as simple as just 20% downright, especially because for Zyia, that's your commission. So you're basically, are you supposed to put away your entire commission? I wouldn't recommend it. But at the same time, if you're saying 20% of your commission, then that makes more sense. I apologize. My head went to like all of the 20%, and I apologize. So yes, I would say It's really funny. Remember Friends? Ross's dad used to tell him to put away 10% of every paycheck for savings. It was a smart idea. I really like that. I was like, I was Monica, I didn't do that. But at the same time, yes, about 10% reasonable. Obviously, everyone's family's different, and you'll have to go to deciding what other financial planning you're doing along the way. But be aware of, especially things like medical expenses. Like I said, my husband ran up to $9,000 in prescriptions last year. I could kill him, but he's just himself. And medical marijuana, I should say, also with a prescription is 100% medical expenses that most drug plans don't cover. And a lot of things, like anything that's out of pocket, if you had to pay additional, even those with plans, I find a lot of people pay, they're like covered for 80%. That other 20% isn't a medical expense. So make sure you're paying attention to those things too. I hope that helps. So Rita, no, not Rita's Rick, NRKND, how do we contact me? So what I'll do is I'll ask Courtney here to post my little special offer for you guys, and I'll put it up there. But my business name is Books by Jessica, and Direct Sales Bookkeeping by Jessica is my subsidiary, because I do truly think that this is my passion project is direct sales bookkeeping. It's just where I believe I'm meant to be, and 31 opened the door for me for that. So I hope that makes sense. I honestly have always been a bookkeeper and thought it was the thing I would do for the rest of my life. I honestly thought everyone did it though. And it took years of my grandfather, of all people. He went back for accounting when he was in his 60s. And for my entire 20s, I'm 38 now, my entire 20s, he nagged me like I'd be going over for dinner, and he'd be like, come and help with the checks. And I'd be like, I don't want to. But so I didn't listen to him, and I wish I had. We lost him in 2016, and I smile because he's with me every day. I know that. I lost all my grandparents in 6 months, 3 of them, and my grandmother, my paternal grandmother, passed away 10 days before my grandfather on my mom's side. So it was just a nightmare of a time. But now when I look back, I'm like, I'm not me without them. So I know I got all the good parts and some of the bad parts, but that's all right. I'm a bad driver. But it's a good thing. But my grandfather, he was listening, and he told me so many times to go and get some schooling and start doing this. But it took, unfortunately, losing him to wake up and realize I needed to do something with this. But at the same time, by then I had to fall in love with 31. And I'm pretty sure I needed 31 to figure out what was missing in the direct sales world, because I really, it breaks my heart when a girl signs up underneath me and I can get them to the finish line and they just don't, like, I've had people say, I don't want to make money because I don't want it to hurt my taxes. And that's heartbreaking. I'm like, girl, make the money, let me help you. So at the end of the day, I really appreciate you guys chatting with me today. I talk about my grandfather on most of my Zooms because he is a huge part of my world. And I'm pretty sure he knew like 20 years ago, and I was doing whatever I wanted to. So I always say I was just a obnoxious 20-year-old. And that's okay. I learned my mistakes, but I hope that you guys can be empowered by this. I want you guys to see this as an opportunity to maximize your tax savings.
Yeah,
but thank you very much.
You are amazing.
Thank you.
You're building this in your grandpa's legacy. And
yes, definitely. And honestly, I think that's what he wanted. He was always a self-employed guy. And I just, like, we fought so much. And I realized, like, one of my first like bookkeeping classes, I was like, so this is what he was talking about. And I just literally was like, this whole time he'd been making me do these functions and I never knew the why. And now I know the why. And I'm like, yeah, I could have learned that a long time ago. So that's okay. I know he's up there just laughing in a good way. And I hopefully I'm doing him proud.
Oh, absolutely. So what I'm going to do is I'm going to post the replay.
Yes, please.
Actually, I'll go ahead and stop recording. But I'm going to post